All right, now on to other major market movers out there. Gold. It's considered usually to be a safe haven during tough times, but new data shows China has been buying less gold than expected. This sent gold prices plunging to their lowest levels in more than 5 years, dipping below that $1,100 per ounce mark today. I'm here with Jim Rickards. You're the author of The Death of Money. Thanks for coming in today.
Thanks, Joe. Great to be with you.
So we saw this plunge today. How much of it was really that China 57% increase? And how much of it maybe was more psychological?
Some of it may have been related. First thing, China announced that they added 604 tons to their official reserves. They actually have thousands of tons, and the evidence for that is very good. Looking at mining output from China, Hong Kong imports, I've spoken to people, they say they're bringing it in off the books. So it's reasonable to estimate they have 3,000 or 4,000 tons. Why did they only declare 600 tons? Well, they're trying to keep the IMF happy because there are some reporting standards. They want the Chinese yuan to join the special drawing right.
It's all about maintaining that market stability, right?
Correct. Look, China's a buyer of gold. Why would you want the price to go up? If I'm China and I want to buy several thousand tons to catch up to the United States, I want a low price, not a high price. So I'm going to lowball my disclosure, just enough to keep the IMF happy. Now, that may have come as a surprise to some people, and then it went down. Then I think you hit stop losses in the hedge fund world. So that's a technical thing where once you hit the stop, everyone's got to sell to get out. So we'll see where it goes from here. If you take, to me, it's really a strong dollar story more than a weak gold story.
Yeah, I would agree with that.
Because you look around the world, everything else, Australian dollar, Canadian dollar, Brazil, iron, other commodities, cotton, wheat, corn, steel, all of these things, earnings, they're all suffering relative to the dollar. So what's Janet Yellen going to do? A strong dollar is deflationary. She wants inflation. This doesn't add up. And
so what do you think, September, December, maybe even next year? Well, we're seeing a strong indicator for this year for the Fed to raise rates.
Well, we're seeing Janet Yellen say she's going to raise rates, and that's what gets reported. But if you actually read these speeches, and I know when you look into it, she says, based on my forecast. Well, the Fed has the worst forecasting record around. They're wrong every year, year after year. I said last year they couldn't raise them in 2015. I'm sticking with that. I don't see how she can raise rates with a strong. It'll make the dollar stronger. Deflation will get worse. It'll push her further away from her goals.
Going back to gold, we saw this new 52-week low. For those who are watching who are big holders of gold or maybe thinking about getting into it as this price drops, what's your advice?
Well, two different things. If you're a big holder of gold, sit tight. The fund's just beginning, no sudden moves. If you don't have your gold, this could be a very good entry point. Now, gold's all-time high was 1,900. So you go back 10 years, gold was about 200. I see it at $5,000 or higher. But nothing goes from 200 to 5,000 without a 50% retracement. That's very rare in commodity space. So if 1,900 is your high water, 50% down would get you to 950, and then it could go up a lot from there. So if you don't have your gold, this looks like a good entry point.
All right. Well, there it is. Jim Rickards, you're the author of Death and Money. Thanks so much for joining us.
Thanks, Joe.